Welcome back. If you just joined us, you're watching Business Incorporated. We're live to you from Channels Television. Now, Vetiver Capital Management is launching today an exchange-traded fund bond, which is expected to be listed on the Nigerian Stock Exchange. Let's talk more about this fund, the benefits to investors, and what is the size of the ETF. We have Pabina Yinkiri, the head of research at Vetiver Capital Management, joining me on the program. Pabina, thank you so much for your time.
Thanks for having me.
Now, what is the character and structure of this exchange-traded fund vis-a-vis the FGN bond market?
Okay, it is called the Vetiver S&P Nigerian Sovereign Bond Index. What it simply does, it tracks the performance of the Nigerian government bonds, local government, federal government bonds. It tracks the yield and the price performance of the bonds. So if an investor is seeking to gain exposure to federal government bond, this is a very, very easy vehicle with which to gain that access.
Okay, what does this fund aim to achieve in terms of portfolio diversification, balancing, and returns?
Well, if you recall, the ETFs are securities which track an underlying. They pretty much track an underlying security. In this case, the FGN bond. So, if you imagine a portfolio, maybe a retail portfolio, or even a foreign diaspora that needs exposure to the Nigerian government bond market, but if you note, if you want to invest in bonds, you must have a minimum of about 100 million naira. You know, so what this security does, it gives investors the opportunity for as little as 127 naira, some thereabouts, which is what a unit of this ETF would sell at when listed today. An investor can gain exposure to federal government bonds.
So, what is your outlook on this ETF bond?
Okay, the outlook, since it's tracking the federal government bonds, which is the underlying, you tend to get the kind of returns the federal government bond will give you. And also not to forget that it will be listed on the Nigerian Stock Exchange, so it will trade like any other stock. So you can go on the floor and bid for the Vetiver S&P Griffin ETF for just like the way you would buy a Zenith Bank or a GT Bank, whatever unit you want with any broker. It is that simple. So that is the kind of access we are giving investors. And I think this is a very good development because it comes on the back of our other equity-based ETFs, which are already listed and trading. But this one gives investors the opportunity to gain exposure to federal government bonds at very, very cheap costs.
So how does the new fund compare with other funds in Vetiver's portfolio?
Like I mentioned, this is the very first bond ETF that tracks bonds. The other ETFs in the markets are equity-based ETFs, and then we have a gold-based ETF, which was the very first ETF listed in this market. What this bond does, it tracks the federal government bond, and is the very first that we are seeing in this market. So, for an investor out there that needs exposure to federal government bonds, just to give some background on what kind of structure you would be seeing, the S&P government bond index is currently yielding about 15% return, and the duration is about 7 years. So you can imagine for an investor that is looking to lock into the high yield environment at the moment, this presents a very, very good investment opportunity for those kinds of investors.
Thank you so much, Pabina Yinkiri, head of research at Vetiver Capital Management. And South Africa's Goldfields will invest $1.4 billion to extend the life of its Damang mine in Ghana. According to quarterly output updates, the investment will extend the life of the mine by 8 years to 2024, in which the firm expects to produce 1.56 million ounces of gold there. Goldfields signed an agreement with Ghana's government in March linking royalties payment to the bullion price and lowering the corporate tax rate to 32.5% from 35%. And Mozambique's central bank has lifted its benchmark lending rate by 600 basis points to 23.25%. According to the country's Monetary Policy Committee, the decision was taken to stabilize the exchange rate and tame inflation, which quickened to 21.96% in August. Mozambique's economy continues to face challenges of weaker commodity prices, lower demand amongst trading partners, and rising U.S. interest rates. According to the recently released economic analysis for the country, growth will continue to slow this year. And Egypt launched the world's biggest tender for liquefied natural gas as officials from top trading houses and oil majors converged on Cairo. After months of speculation and delay, state-run Egypt Natural Gas Holding released the tender in a bid to secure 96 LNG shipments over 2017 to 2018. An additional 12 optional cargoes were included in the tender, which EGAS may decide not to award. The payment period in which suppliers can expect to get paid has been extended from 90 days after the date of delivery to between 120 and 180 days, reflecting Egypt's increasingly tight US dollar reserves. And Saudi Arabia's Energy Minister Khalid Al-Falih said his country is starting to play an important role coordinating between Russia and OPEC's Gulf members. Russian Energy Minister Alexander Novak, who is in Saudi Arabia on his first official visit as minister, met the energy ministers of the Gulf Cooperation Council, which included key Gulf OPEC producers, Saudi Arabia, Kuwait, United Arab Emirates, and Qatar.
Saudi Arabia has started to play an important role to coordinate between Russia and the countries that are affected by the policy of Russia outside of OPEC and those within OPEC, specifically the Gulf countries. We have managed today, in conjunction with a meeting of the Gulf Cooperation Council and the visit of His Excellency, the Russian Energy Minister. We held a common meeting to reach a common notion to what we can reach in November.
And with that, so we've come to the end of Business Incorporated. Thank you so much for watching. We do appreciate your time with us. I'm Bolaji Akinwale.